Hi everyone. So very good morning to all of you. So I would like to welcome you all to the second lecture, second session of financial accounting and reporting course. So before starting, can somebody please confirm whether I'm audible and whether you can see my screen? Am I audible and whether you can see my screen?
Yes, madam.
Yes, thank you very much. Right. So, good morning again. I know it's gloomy and it's raining today. Some of you might experience that. So, we'll continue, right? We'll try to focus, and we are starting a new lesson, conceptual framework for financial reporting. So, we'll discuss what are the important things, what do you have to remember, and everything, right? Okay, so let me start the session. So before starting with the lesson, conceptual framework for financial reporting, please rename yourself with your name and the CPM for attendance capturing, right? Please rename yourself with the CPM and the name. Okay, now in the first lesson, right? This is our second lesson now. In your first lesson, you have discussed what is accounting, what is financial reporting, what is general purpose financial reporting, what are the regulations, regulatory requirements. Likewise, you have discussed. Now, in this lesson, we are going to focus on this conceptual framework for financial reporting. Actually, you have learned this previously. In your A levels, you have learned this conceptual framework for financial reporting. In Sinhala terms, we call what? Sankalpanatmaka Ramuva, right? Mulya Vartakarane Sankalpanatmaka Ramuva. That is what we are going to discuss today. But apart from the things you learned in A levels, during your A levels, we will discuss more into detail. Right. Okay. So these are the learning outcomes for the day. We are going to talk about explain. At the end of this session, you will be able to explain what a conceptual framework is, right? This one, what a conceptual framework is. And then what is conceptual framework for financial reporting? What a conceptual framework, and then what is this conceptual framework for financial reporting, and then what is the purpose of it, what is the purpose, and what is the relationship between this conceptual framework for financial reporting and the accounting standards. Now you have learned several accounting standards now, so what is the relationship between these two, and the evolution, how this started, how is it going, what are the updates, like evolution of this conceptual framework, then the structure, components, and then finally benefits and limitations of this conceptual framework. So these are the learning outcomes. You will be able to find answers for these things at the end of the lesson. Right. So this lesson, actually, we are going to have this lesson for 2 days, right? So this is your first week. This week, you completed your first lesson on Monday, right? Your first day. And this is the second day. We are starting this second lesson. And this will be completed on next Monday, next week, Monday, right? So what is a conceptual framework? First of all, before starting to learn conceptual framework for financial reporting, you need to have a good understanding about conceptual framework. So what do you mean by a conceptual framework? So I'll ask a small question. You can always unmute yourself and ask questions, give me answers, and use the chat box, right? So I'll ask a small question. Do you think this conceptual framework is only for financial reporting? Do you think this conceptual framework is there only for financial reporting? Or do we have any other conceptual frameworks as well? What do you think? I need your answers. Thank you. I'm getting the answers. Very good. So you are giving me answers. You can send it to everyone. So everyone can see your answers, right? Exactly. Very good. So, conceptual framework is not only for financial reporting. There can be other conceptual frameworks as well, right? There can be other conceptual frameworks as well. Now, we'll see what is this first. What do you mean by a conceptual framework? A conceptual framework is usually considered as a set of guiding principles that influence and direct decisions in a particular area. Now, basically, conceptual framework is set of guiding principles. Conceptual framework guides something. It can be any discipline. ඕනම discipline එකක් වෙන්න පුළුවන්, right? Not only financial reporting. So what happens is it influences or it directs that particular area, right? So it's a guiding principle, set of guiding principles. Such frameworks are used in many areas to establish specific guidelines to make decisions or solve problems, right? Basically, conceptual framework says what to do, what should be done. These are the guiding principles. That is a conceptual framework. So apart from this conceptual framework for financial reporting, the thing we discuss, what is an example we can use for other conceptual framework? Sri Lanka qualifications framework. That is another conceptual framework. So what do you mean by this Sri Lanka qualifications framework? You don't have to study the Sri Lanka qualifications framework, but just remember, there are other conceptual frameworks as well. One example is this Sri Lanka qualifications framework. So actually this framework is in which discipline, which area? It is in higher education qualifications. So this conceptual framework is in higher education sector. Our conceptual framework is in financial reporting, right? Likewise, examples are there. So you can see it explains how these qualifications are there in higher education area, higher education discipline. These are the certificate, A-level, diploma, higher diploma, bachelor's. Likewise, it explains what are the qualifications awarded, what is the comparable NVQ level, what is that level. Likewise, it gives the guiding principles. So this is an example. You can remember the example, right? You don't have to remember these one by one, these line items, but remember that example. Right. Now, with that, we are moving to conceptual framework for financial reporting. The conceptual framework we need as accounting students, right? So what are the common questions on conceptual framework for financial reporting? What are the common questions? Basically, what is it? What is this conceptual framework for financial reporting? What is the purpose of it? How did conceptual framework for financial reporting evolve? Right? කොහොමද ඒක පටන් අරගෙන දැන් වෙනතුරු ආවේ? What are the elements? What are the elements in this conceptual framework? And what are the benefits and limitations? So in the learning outcomes also, I mentioned these things. So these are the common questions we have with regards to this conceptual framework. And we are going to find answers for these. Right. Basically, now previously we discussed the definition for conceptual framework. Now you know conceptual framework is a set of guiding principles. Now, what is the definition we have for this conceptual framework for financial reporting, right? Our interest. Let's read the definition, right? Let's read the definition. A coherent system, yes, of interrelated objectives and fundamentals. Okay, it's a coherent system of interrelated objectives and fundamentals that can lead to consistent standards and that prescribes the nature, function, limits of financial accounting and financial statements. So this definition was given by Financial Accounting Standards Board, FASB, in 1989. Right. Let's look at this definition. You need to understand this. It says a coherent system. conceptual framework for financial reporting is a coherent system. System means it's a paddhatiyak of interrelated objectives and fundamentals. එකිනෙකට සම්බන්ධ වෙච්ච interrelated. Objectives means aramunu. Fundamentals, mooladharma. So I'm explaining it in Sinhala as well, because if you have learned this in A-levels, if you have done A-levels in Sinhala medium, now you can recall your memory, right? That's why I'm explaining giving the Sinhala terms as well. And also you can ask me questions, right? If you don't understand any English term, you can always ask me the Sinhala term. I can explain. It's a coherent system. එක පද්ධතියක් of interrelated objectives and fundamentals. එකිනෙකට සම්බන්ධ වෙච්ච අරමුණු සහ මූලධර්මයන්ගෙන් සමන්විත. For what? For what? That can lead to consistent standards. Now here standards means what? Standards means what? What do you think? Which standards can මොනවද? What are these standards? Standards refer to what? Which standards? Which standards? Lead to consistent standards, it says in the definition. So I'm asking, which standards? Yes, very good. Accounting standards. Accounting standards. So basically it talks about accounting standards, right? Which can lead to consistent standards and that prescribes the nature, so Bahavaya, function, limits of financial accounting and financial statements. So basically, this conceptual framework for financial reporting, it is a system. It includes interrelated objectives and fundamentals. For what? It leads to consistent standards. එක වගේ accounting standards. සංගත භාවයකින් යුතු accounting standards. Consistent accounting standards. And that prescribes nature, function, limits of two things. What are the two things? Financial accounting and financial statements. So basically, conceptual framework for financial reporting, it guides the accounting standards. It guides financial accounting. It guides financial statements. So this is what the definition of conceptual framework for financial reporting. So you will understand more when we discuss in detail the small parts of this, right? But remember, it's a system, interrelated objectives and fundamentals. It leads consistent standards. It gives the nature, function, limits of financial accounting and financial statements. Right. Moving on to the next slide. Now the purpose. What is the purpose of this? Why we have this conceptual framework for financial reporting, right? So you can see the purpose of this conceptual framework for financial reporting is there are three purposes given. So you can remember A, B, C. There are three purposes. What is the first purpose? Why we have this conceptual framework for financial reporting? Why we are learning this? First one is assist the standard setters. Which standards? Accounting standards. Assist the standard setters to develop accounting standards that are based on consistent concepts. So this conceptual framework gives the foundation, right? For standard setting. When we are setting, not we are setting, right? When the accounting standard setting board sets the accounting standards, those are standard setters. This conceptual framework gives the foundation, right? It assists. This is how you need to develop an accounting standard. So basically, conceptual framework assists the standard setters to develop accounting standards. Let's say we don't have this conceptual framework. Let's say we don't have this conceptual framework. Now what will happen? Those accounting standards will not be consistent. They will be developed in an ad hoc manner. පිළිවෙලක් නැහැ. සංගතභාවයක් නැහැ. නිකම්ම හදයි. එහෙම නැහැ. When we have this conceptual framework, it gives the guidelines. This is how you need to develop. This is the order. These are the things we need to mention, right? Likewise, it helps the standard setters. So remember the first purpose. Second purpose, look at the second purpose. This conceptual framework assists preparers to develop consistent accounting policies. What do you mean by accounting policies? Accounting policies means ginum karana pratipatti, accounting policies. So before reading the rest of the words, rest of the sentences, can I have few examples for accounting policies? Can I have some examples for accounting policies? What are these accounting policies? Accounting policy. මොනවද මේ ගිණුම් කරන ප්‍රතිපත්ති කියන්නේ? A rough understanding, few examples. Accounting policies. Now, I'll give you one exactly. Very good. Yes. When you are valuing inventory, you can go for FIFO or WAC. That is your accounting policy, not your accounting policy. Company's accounting policy. So company can select, okay, for inventory valuation, we'll go for WAC or FIFO. That is accounting policy. Another one, another policy. Yes, I'm getting the answers. Thank you very much. Exactly. So we can decide, the company can decide whether to go with cost model or revaluation model when we are valuing property, plant and equipment. Likewise, you have several accounting policies. Now, what does it say? Conceptual framework assists preparers to develop consistent accounting policies. Consistent accounting policies when no standard applies to a particular transaction or other event. When there are no relevant accounting standards, right? When there are no relevant accounting standards, when the company has to decide an accounting policy, then who is providing the guidance? Conceptual framework for financial reporting. So in the absence of a relevant accounting standard, when the company has to develop accounting policies, who is providing the guidance? Conceptual framework, right? Or when a standard allows a choice of accounting policy. Let's say there's an accounting standard, it allows the choice, it allows to select an accounting policy for the company. When a standard allows a choice means company එකට පුළුවන් කැමති accounting policy එකක් තෝරගන්න. There's a choice. In that case also, when we are selecting an accounting policy, who is providing the guidance? Conceptual framework for financial reporting. So I hope those two instances are clear, right? The first purpose is it assists the standard setters to develop consistent accounting standards. Second one, it assists the preparers to develop accounting policies. What are the two instances? When no standard applies to a particular transaction or event, or when a standard allows a choice of accounting policy. In those two instances also, conceptual framework guides the preparers. So that is the second purpose. What is the third purpose? Assist all parties to understand and interpret the standards. When we are reading accounting standards, when we are interpreting, when we are interpreting the accounting standards, which provides a guidance? Conceptual framework for financial reporting. So to understand, to interpret accounting standards, right, to set accounting standards, and to develop accounting policies, this conceptual framework is there. So that is like the backbone, right? Okay, so these are the purposes of this conceptual framework. So shall I show you the conceptual framework? Look at this. We have uploaded this to LMS. You can refer it, you can download and refer it, right? Try to read it, but understand the elements. This is the conceptual framework for financial reporting. You can see, and see, the contents are given. Different chapters are there in this conceptual framework. Chapter 1, Chapter 2, likewise it goes. And then everything we discuss here is included here, right? It explains the purpose and everything. See, this is the purpose of conceptual framework. There are three. These are the points we discussed right now. Okay, so you can go back to this conceptual framework and read and understand. Okay, right. So these are the three purposes. I hope that's clear. Yes. Do you have any questions? If you have, you can unmute yourself and ask, or you can always use the chat box. Okay. Now, what is the relationship between this conceptual framework for financial reporting and the accounting standards? Now you know one fact, right? When it comes to accounting standards development process, when we are setting the accounting standards, which provides the guidance? Conceptual framework. Knowing that in your mind, right? Yes. Knowing that, so look at this diagram. Conceptual framework is there. Conceptual framework for financial reporting provides the conceptual foundation to address new issues in the absence of accounting standards. So when the accounting standards are developed, who is assisting this conceptual framework? So that's why it says conceptual framework. It assists the accounting standard setting process, right? That is the relationship. And one very important thing. Now, when this conceptual framework for financial reporting is there, what is its main concern? What is its main focus? Now you have learned general purpose financial statements, no? General purpose financial reporting you have learned in your session 1, right? Now when it comes to this conceptual framework, its main focus is general purpose financial statements, right? Conceptual frameworks, main purpose, main concern is general purpose financial reporting. Now I'm asking another question. What do you mean by general purpose financial statements? What do you mean by general purpose financial statements? You have learned this. මොකද්ද මේ general purpose financial statements කියන්නේ? Can I have answers? What do you mean by general purpose financial statements? Yes. Good. Can I have more answers? Now there are 141 students joined here. Can I have more answers? What do you mean by general purpose financial statements? General purpose. Very good. Now, general purpose financial statements are prepared for parties who are not in a position to request the information they want, right? Let's say I am not in a position to request the information I want from the company. I can't request මට කියන්න බෑ මට මෙන්න මේ ටික තමයි ඕනේ details ටික. මෙන්න මේ reports මට ඕනේ කියලා කියන්න බෑ. I'm not in a position to request the information I want. So for those people, for those who are not in a position to request the information they want from the company, right? For them, the company is preparing general purpose financial statements. So these general purpose financial statements are common to everyone. So when you have, we have uploaded this general purpose financial statement, that means annual report to LMS. I hope you have gone through it, right? Haley's annual report. Now that is general purpose financial statement. Anyone can access it. Anyone can read it. But they can't request the information they want from Haley's. මට මෙන්න මේක ඕනේ කියලා ඉල්ලන්න බෑ. That is general purpose financial statements, right? Now, this conceptual framework is mainly focused on general purpose financial statements. Why? What is the reason? These people, these parties cannot request the information they want. So when the company is preparing these general purpose financial statements, they should be accurate because those parties can't ask information, company is giving information. So the information given by the company should be adequate, should be relevant, should be faithful, should be accurate. So for that, this conceptual framework is guiding the companies for this financial accounting process. I hope you are clear with that relationship. You need to understand why this conceptual framework is mainly focusing on general purpose financial statements because those people cannot request the information they want. That's why conceptual framework is guiding this process, right? Remember, conceptual framework is for general purpose financial statements. So again, conceptual framework guides the accounting standards. Now, by using accounting standards, these general purpose financial statements are prepared. Now, these general purpose financial statements are used by both external and internal stakeholders that you have learned, right? Internal and external, mainly external. They refer to general purpose financial statements. So that is the overall picture you need to remember. Conceptual framework is there. It guides the accounting standards. By using these accounting standards, general purpose financial statements are prepared. Those are used by both internal and external stakeholders. That is the relationship. So, preparation of general purpose financial statements comes under financial accounting, right? As a result of the financial accounting, we have the general purpose financial statements. So that is the relationship, right? And then we are moving to the evolution of conceptual framework. කොහොමද මේක develop වෙලා අද වෙනතුරු ආවේ? Evolution. Now, I'm not going to read the full table, right? We have a summary, but just 1978 Financial Accounting Standards Board. We call it FASB. That conceptual framework was prepared, right? And then there were different upgrades, right? Updates were there. Likewise, in 1978 to 2002, and then 1989, International Accounting Standards Board, IASB's conceptual framework, and then 2010 revised, right? And 2018 again revised. Likewise, there were different revisions with updates. New financial accounting conceptual framework is there. Now it will be very clear to you. Press. Just focus this slide. Now it will be very clear. The evolution. Framework for the preparation and presentation of financial statements in 1989. So remember, this conceptual framework was developed in 1989. After that, 2010, there was a major revision, right? With that revision, we call it Conceptual Framework for Financial Reporting. The name has been changed. Conceptual Framework for Financial Reporting 2010, right? With the revisions, 2010, again, this conceptual framework came. And then again, in 2018, there was another revision, Conceptual Framework for Financial Reporting 2018. And this is the conceptual framework we are using at the moment. Now, with these new revisions, 2018 framework was effective for annual reporting periods beginning on or after 1st January 2020. So, 2020 ජනවාරි 1 වෙනිදා ඉඳන් අපි use කරන්නේ මේ 2018 conceptual framework එක. So, since 1st January 2020, we are using this conceptual framework for financial reporting 2018. So, just remember, we are using the 2018 framework. That is the latest revised conceptual framework. So, from 2020, we are using it, right? So, remember the evolution. These three benchmarks are enough, right? Remember these three. Okay, moving on to the structure and components now. Now, before going to this segment, uh, are there any questions you can ask? Are there any questions or clarifications? Are you clear up to this point? We discussed what a conceptual framework. I told you it's a set of guiding principles. Conceptual frameworks are not only in financial reporting. There can be other conceptual frameworks in other disciplines as well. So we took one example, Sri Lanka qualifications framework, and then we discussed the definition for conceptual framework for financial reporting are concerned. So I told you it's a system, right? It has interrelated fundamentals and objectives, right? Fundamentals and objectives. And then it sets the guidance for accounting standards, setting standards, and it prescribes the nature, function, limits for financial reporting and financial statements that we discussed, right? And then we discussed different things. What is the evolution and whole? Now, I have another question coming. I have a question, a very good question. Now, who has developed this conceptual framework? Who has developed, who has the authority to change the conceptual framework? By looking at this table, you can find the answer. Who is developing this conceptual framework? It's a good question, I would say. Can I have answers? Who is developing? Very good. Very good. IASB. See, from 1989, International Accounting Standards Board, IASB, has developed this conceptual framework. Right. So I have a message. Can that student has came late. Can you give me a brief understanding? Yes, I'm giving it now. So we discussed the definition and then we discussed the purpose. There are three purposes of conceptual framework: to set the guidance for accounting standard setters, right? It guides the accounting standard setters and it guides the preparers of accounting policies. When there is no accounting standard, when to develop the accounting policies, this conceptual framework guides that process. And when the accounting standard allows the choice of accounting policies, there also conceptual framework guides that, right? And to understand and interpret accounting standards, we need the conceptual framework. So those are the three purposes. And then I told you this conceptual framework is mainly concerned with general purpose financial statements. So you can understand that relationship. That's what we discussed up to this point, right? Okay, now we'll go back to this, the structure and components of this conceptual framework. Now, this framework, new framework means which year? New framework means which year? New framework. Very good, 2018. That is the latest revised conceptual framework. This framework has 8 chapters. So what are the 8 chapters? Now in this conceptual framework, so I'm showing the conceptual framework. We have uploaded this to LMS. Chapter 1, how many chapters are there? Chapter 1, Chapter 2, it talks about qualitative characteristics. Chapter 3, financial statements and the reporting entity. Chapter 4, elements of financial statements. And then Chapter 5, recognition and derecognition. Chapter 6, measurement. And then Chapter 7, presentation and disclosure. Chapter 8, concepts of capital and capital maintenance. So you don't have to read and understand everything, every chapter. We have picked the important things for you. But remember, there are 8 chapters in the conceptual framework. Yes, 8 chapters are there. So these are the chapters. These are the chapters we saw. Objective of general purpose financial statement, financial reporting. So first of all, the objective is explained in the conceptual framework. Why? Why this objective of general purpose financial reporting has been explained in the conceptual framework? What is the relationship? Now, in the conceptual framework, it has explained the objective of general purpose financial reporting. Why? Why this general purpose financial reporting is there in the conceptual framework? I explained this. What is the reason for that? As you can see in the conceptual framework, in the first chapter, chapter 1, it is about the objective of general purpose financial reporting, not the objective of conceptual framework, I would say. Very good. The reason is main focus of conceptual framework is the general purpose financial statements. So general purpose financial statement preparation, that process is guided by the conceptual framework through accounting standards. That is the relationship. So actually the objective of conceptual framework, it is driven by the objective of general purpose financial reporting, right? There's a particular objective for general purpose financial reporting. Now, from that, we can derive the objective of this conceptual framework. Those are that related. And then the qualitative characteristics. Now, what are the qualitative characteristics we need to have in financial information? And then after that, from chapter 3, it explains financial statements, what are the elements, and then what is a reporting entity, how to recognize, how to de-recognize, how to measure, how to present and disclose, and what are the concepts of capital and capital maintenance. So these are the chapters we are going to discuss. Right. Moving on. Now we have moved to the chapter 1. What is the chapter 1 is about? The objective of general purpose financial reporting. So I explained you the general purpose financial reporting. It prepares the general purpose financial statements. Those reports, those statements are prepared for parties who are not in a position to request the information they want, right? They are not in a position to request the information they want. Similarly, like all external parties, they can't request the information they want. So what is the objective? What is the objective of this general purpose financial reporting? To provide financial information about the reporting entity. Reporting entity means the entity which prepares the financial statements. Reporting entity that is useful to existing and potential. Existing and potential, right? I have a question. Why can't they request? Now, let's say you are referring to Haley's PLC's annual report. Now, we have uploaded that annual report to LMS. So, you are reading the Haley's PLC's annual report. Can you ask the Haley's PLC to send the detailed information about something? Can you call them and ask, look here, I need this information. Please send me the information. Will they send you? Can you get that information? No, right? We can only refer to the annual report, their website, other reports and everything. We can't exactly say this is the structure we want. These are the information we need. Prepare the financial statements like this. Can you request information like that? No, you can't, right? That's why for us, we have the general purpose financial statements. I hope that's clear. Yes, sure. It's good. You can ask questions whenever you have clarifications. Let's come back to the objective. So I told you to provide financial information about the reporting entity that is useful to existing and potential. Existing, වර්තමානයේ සිටින සහ potential අනාගතයේ එන්න පුළුවන්. Potential, who are the parties? Investors, lenders, and other creditors in making decisions about providing resources to the entity. So remember, this is the objective of these general purpose financial statements, to provide financial information about the reporting entity for three parties. Who are the three parties? Existing and potential investors, lenders, and other creditors. Why? To make decisions about providing resources to the entity. මේ entity එකට resources provide කරනවද නැද්ද කියන decisions ගන්න existing and potential investors, lenders and other creditors කියන parties වලට financial information දෙන එක. That is the purpose of general purpose financial reporting. So what are the decisions actually? So it says making decisions about providing resources to the entity. What are the decisions? Now there are three important decisions. Buying, buy කරනවා, selling or holding equity and debt instruments. That is one decision. What do you mean by this? Can I have examples for this? Buying, buy කරනවා, selling or holding equity and debt instruments. To make decisions about this, investors, lenders, and other creditors get the information from the general purpose financial reporting. What is the decision? Can I have an example for this decision? Buying, selling, or holding equity instruments means I'll take shares. Now, there are existing and potential investors, maybe shareholders. Shareholders currently, they have bought shares in the company, and future investors who are thinking of, who are looking for shares in the company. That means they are thinking of buying shares from that company, existing and potential. When they are buying shares, when they are selling shares, when they are holding the shares, they are looking for information. They take the information from the general purpose financial reporting. So whether to sell this, if the company is not performing well, let's say by looking at the general purpose financial statements, profits are going down like this. The company is not performing well. In that case, investors, the shareholders, will try to sell their shares. Okay, no point of keeping these shares with me. I will sell the shares. Likewise, they will get the decision to sell the shares. Let's say if the company is performing well, company is profit making, that company is doing well, then the investors will decide to buy the shares of that company. So to make that decision, information was taken from the general purpose financial statements. Or let's say to keep the shares they have, to hold the shares they have, they will decide these things based on the information in the general purpose financial statements. I hope that is clear. That is the decision. And then to providing or settling loans and other forms of credit. Now the banks will decide whether to give a bank loan to this company or not based on the general purpose financial reporting. If the company's debt amount is way too high, then the bank will not give another bank loan to that company because there's high chance that the company will not be able to settle the loan. So when providing bank loans, general purpose financial reportings will be used to make decisions. And then exercising rights to vote, චන්දෙ right? Vote කරන්න. Or otherwise influence, බලපෑම් කරන්න. Management's actions that affect the use of the entity's economic resources, right? Management can make decisions about the resources in the company, in the entity. So investors can vote against them or vote in favor of them or influence these decisions based on the information given in the general purpose financial reporting. So these are the decisions involved in the provision of these resources, right? So remember, the objective of general purpose financial statements, reporting, and the decisions. What are the decisions? What are the examples? So I gave you examples for each and every decision. Right. So I hope you are keeping notes of these important aspects. Right? Right. Okay. Now, this is also very important. Look at this one. We'll go slowly. Don't look at the big picture at once. We'll understand slowly. Look at this box first. Financial information about reporting entity to users in making decisions about providing resources to the entity. That means objective of general purpose financial reporting, right? You can mention these things because it is not in the slide now. This is what? This is the objective, right? To provide information to these parties to make decisions about providing resources to the entity, whether to sell shares, whether to buy shares, whether to hold the shares and other equity instruments, whether to give loans and other debt instruments, whether to vote, whether to influence. So to make these decisions, financial information is provided by the general purpose financial reporting. So this is the objective. This box is all about the objective of general purpose financial reporting. Now there are two other boxes. The first one is economic resources and claims. Economic resources and claims. Now, what do you mean by these economic resources? Just think about the accounting equation. Think about the accounting equation and tell me what are economic resources? Economic resources means what? Economic resources means what? Think about the accounting equation and tell me what do you mean by these economic resources? Resources that make economic benefits. What are those? Exactly, assets. We are talking about assets, right? Right, assets. A, assets. Asset equals what? What is the accounting equation? I hope you can remember. Assets equals equity plus liabilities, right? Let's say, look at this example. Let's say your company has purchased a building. Your company has purchased a building. Company has purchased the building using company's own money. Company's own money, right? Company has purchased a building. In scenario 1, I'm giving two scenarios. In scenario 1, company has purchased a building using company's own money. Now, who has provided this money to the company? Company's own money means who has provided this company, who has provided this money to the company? කවුද මේ දීලා තියෙන සල්ලි company එකට සල්ලි කොහෙන්ද? Company's own money na owners. Exactly. Owners have provided capital to the company. So using that cash, using those resources, company is purchasing a building in scenario 1. Second scenario, company is purchasing a building not from company's own money, but by obtaining a bank loan from a bank. Right? There are two scenarios. Purchasing a building using company's own money provided by the owners. Purchasing a building using a bank loan. Now tell me, in scenario 1, you have purchased a building and you have used your cash in the company. What is that? Equity or liability? Who has the ownership to your building? Who has the real ownership to your building? Equity. Equity. That is equity. Owners. Right? Very good. Very good. Yes. What about the second scenario? Company has purchased the building, but from bank loan. Actually, that building was provided through what? Liability. Bank loan is a liability. So that is the relationship. Assets are there. Economic resources are there. Claim is from two sources, maybe equity, maybe liabilities. So what happens when you obtain a bank loan and purchase this building? Assets goes up, liabilities goes up because asset, that building was funded by the liability. First scenario, that building was funded by equity. That is what? That is the relationship between these accounting equations. So, when The general purpose financial reporting provides information. There are two types of information. First one is we have to tell through these general purpose financial statements, we have to provide information about our economic resources. That means about our assets and the claims. You call this claims. Claims. Claims means what? Equity and liabilities. I'm not writing the full word. Claims, equity and liabilities. So we have to provide information about the economic resources. That means assets and claims to assets. Claims to economic resources. That means equity and liability. Now, what is the statement we are using to give information about these assets, equity and liabilities? What is the statement we prepare coming under general purpose financial statements to give information about this assets, equity and liability? What is the accounting statement we prepare? Statement of financial position. Very good. Statement of financial position. Right? මූල තත්ත්ව ප්‍රකාශනය. ඒක හදන්නේ මොකටද? මේ assets, equity and liability ගැන information දෙන්න. So, do you understand the relationship? Why we are preparing this statement of financial position? Actually, this is prepared because of the objective of general purpose financial statements. The objective is there. What is that? To provide information. We need to provide information about the economic resources and the claims. So what is the statement we are preparing? Statement of financial position. So you call it financial position. Are you okay with that? I hope it's clear. If you are not clear, you can ask me. The second one, we have to give information about the assets as at a particular date, assets, equity and liability. Not only that, no, we have to give information about changes in economic resources and claims. Changes in economic resources and claims. So changes in assets, how equity changed, how liabilities changed. Now, what are those elements? We are talking about what? Changes means we are talking about basically income, expenses. There can be income. Because of these income, assets can change, equity can change, right? Expenses, income, these things are there. Not only income and expenses. There can be drawings, there can be additional capital provided, different items are there. So changes are there. During a particular period, assets change, equity change, liability change. Changes in financial position. So now, because we have to give information about these changes, we are preparing other financial statements. Now, what is the financial statement we prepare to give information about the financial performance? What is the statement we prepare to give information about the financial performance? You have prepared this. What is the statement we prepare to give information about the financial performance? මූලික කාර්ය සාධනය ගැන information දෙන්න අපි prepare කරන්නේ මොකක්ද? Answer is here. Statement of profit or loss and other comprehensive income. Right? ලාභෝලාභ ප්‍රකාශනය. Statement of profit or loss and other comprehensive income. Right? That is a profit or loss statement. In simple terms, we prepare to give information about the financial performance. I hope that is clear. So it talks about the changes. No, basically it shows what are the income sources, what are the expenses. This is the profit. This is the financial performance for a period. That is one statement. Look at the second one. Cash flow statement. We are preparing cash flow statement as well. Mudal Pravaha Prakashaya. Can I have the different, like we have three segments now coming under cash flow statements. What are the activities we use in these cash flow statements? We are categorizing the transaction. We are categorizing the cash flows, cash inflows and outflows under three activities. in the cash flow statement. What are those three activities? Operating activities, investing activities, and financial activities. මෙහෙයුම් ක්‍රියාකාරකම්, මූල්‍ය ක්‍රියාකාරකම්, ආයෝජන ක්‍රියාකාරකම්. Right? Operating, financing, and investing activities. Now, through these activities, look at the operation activity. Think about the operations activity. There, you give information about this financial performance. Now, coming on to operations activity, what do you write? Cash received from sales. Cash sales. Maybe cash received from debtors. Those are operation activities. So you show these things under cash flow statement. What about other activities? Investing activities, financing activities. When you obtain a bank loan, right? It changes the liability. When you issue shares, it changes your equity, right? It changes your equity. It changes your liability. So those things are prepared. Those things are also shown in the cash flow statement, coming under investing activities, financing activities, right? And then we prepare another statement. What is that? Statement of changes in equity. Himikam වෙනස් වීමේ ප්‍රකාශය. There you specifically mention, but what are the changes happen to equity? Let's say the company has issued shares. When the company is issuing shares, where do you record it? Where do you record it? In the statement of changes in equity. And also you record where? In the cash flow statement. Why? Coming under investing activities, you record that you have issued shares. කොටස් නිකුත් කරාට පස්සේ ඔයාලා එක දාන තැන් දෙකක් තියෙනවා. කොටස් නිකුත් කරාම එකක් දානවා statement is changes in equity. හිමිකම් වෙනස් වීමේ ප්‍රකාශයක දානවා. අනිත් පැත්තට එක දානවා කොහෙද? මුදල් ප්‍රවාහ ප්‍රකාශය. ආයෝජන ක්‍රියාකාරකම් යටතේ. So this is the relationship we have. Starting from the objective. Objective is to provide information to interested parties, and then we are giving information about two things. First one is about the economic resources and the claims. That means asset, this box, the first box. Let me show this. The first box about the assets, equity, liability. And then the second box, changes to these economic resources and the claims. What happens there? During a period, what are the changes? So, to show the assets, equity, and liability, you prepare the statement of financial position. Now, in the second part, to show the changes during a period, first you prepare statement of profit or loss and other comprehensive income. ලාභ හෝ අලාභ සහ වෙනත් විස්තීර්ණ ආදායම් ප්‍රකාශය. ඒක හදනවා due to show the financial performance. මෙන්න මේ income, මෙන්න මේ expenses තමයි තියෙන්නේ. මේ නිසා වෙනස් වෙලා තියෙනවා අපේ assets, equity, liabilities. On the other hand, there can be other transactions. They are not income and expenses, but other transactions. Maybe issue of shares. Pala shares නිකුත් කරලා company එක. In those transactions, you record in the changes in equity, statement of changes in equity, and you always record them in the cash flow statement. Cash flow statement. මුදල් ප්‍රවාහ ප්‍රකාශය දානවා. So this is the big picture, right? Now, don't think these statements are, these financial statements are standalone. මේවා එකපාරටම හදනව නෙමෙයි. මේවා හදන්න reason එකක් තියෙනවා. Why we are preparing these statements? Because we need to show the economic resources and claims and the changes to economic resources and claims. Why we need to show them? Because of the objective of general purpose financial reporting. Because to provide the information. Right. So that is the big picture you need to understand here. Do you have any issues? Any clarifications to be made? You can ask. Is it clear? Yes, thank you. Right. Moving on to the next. Now, financial statements and the reporting entity. What do you mean by financial statements and the reporting entity? First, you will discuss financial statements. We will discuss financial statements later. You know that financial statements previous years so we discussed. But what is this reporting entity? Reporting entity is defined in the conceptual framework as reporting entity is an entity that chooses or is required to prepare general purpose financial statements. Now, in the previous slide, all these are general purpose financial statements, right? This objective to give these information, we are preparing the general purpose financial statements. So, who is a reporting entity? What is a reporting entity? Entity which chooses or required to prepare general purpose financial statements. General purpose financial statements හදන entity එකක් තමයි reporting entity කියලා කියන්නේ in this conceptual framework. Reporting entity is not necessarily a legal entity. It can comprise a portion of an entity or two or more entities. Now you will learn there can be merged companies. Company A, Company B, they are working together. They are merging. They are also you prepare general purpose financial statements. So it should not be necessarily a legal entity. It can be preparing general purpose financial statements. There it becomes a reporting entity. Financial statements provide information about what? Assets, liabilities, equity. Assets means economic resources. Liabilities and equity means claims to economic resources, right? We discussed. And income and expenses generated by the set of economic activities that lie within the boundary of the reporting entity. So in this reporting entity, through different economic activities, assets, liabilities, equity, income, and expenses are generated. These are explained, these are reported using the financial statements, the thing we discussed previously. Financial statements are normally prepared on the assumption, upakalpanaya, that the reporting entity is a going concern and that will continue in operation for a foreseeable future. Right? ඒ කියන්නේ මොකද්ද? Then going concern කියන්නේ මොකද්ද? What do you mean by going concern? You have learned this as well. What do you mean by going concern? You can type English, right? I know you can type English very well. What do you mean by going concern? Even you can say the Sinhala word. Going concern කියන්නේ මොකද්ද? අඛණ්ඩ පැවැත්ම. අඛණ්ඩ පැවැත්මක් තියෙනවා. අඛණ්ඩ පැවැත්මක් කියන්නේ going concern means you are going to continue the operations of a business for a foreseeable future. අනාගත අපේක්ෂිත කාලයක් දක්වා මේ ව්‍යාපාරය කරගෙන යනවා. අඛණ්ඩ පැවැත්මක් තියෙනවා. කියන උපකල්පනය. But on that assumption, now the company is doing their work on going concern. So we are also preparing financial statements based on the assumption of going concern. අපිත් financial statements හදනකොට මේක හෙට වහයි ලබන සතියේ වහයි කියලා නෙමෙයි. We think that will company is on a going concern, so we prepare financial statements based on that, right? Remember, we are preparing the financial statements based on the assumption of going concern, right? අනාගත කාලයක් දක්වා තියෙයි කියලා. When we assume that the company will continue for a foreseeable future, we do classify our assets and liabilities at what? අපි assets and liabilities classify කරනවා නේද? කොහොමද classify කරන්නේ? As current assets, current liabilities, non-current assets, non-current liabilities. Current assets means assets which will last for more than 12 months or less than 12 months. Less than 12 months. මාස 12ට අඩු. අපි සරලව කියන්නේ එහෙමනේ. So current assets. Non-current assets which will last for more than 12 months. How can we classify assets and liabilities like that? On the assumption of going concern. අපි හිතනවා මාස 12ට වඩා වැඩියෙන් කාලයක් තිස්සේ මේ බිස්නස් එක කරගෙන යයි කියලා. By using that assumption, we can classify assets as current and non-current. Let's say the company is thinking of shutting down the company activities in the next month. Can we classify assets as current and non-current now? Can we classify current and non-current as assets and liabilities as current and non-current? Company එක ලබන මාසේ වහන්න ඉන්නේ. Can we classify? We can't, right? Because we can't say the assets will there for more than 12 months. Liabilities will there for more than 12 months, right? So we will have to classify everything as current. Likewise, you need to do changes based on the assumption. So normally we prepare the financial statements based on the going concern assumption, right? Okay. Now we are going to talk about the qualitative characteristics of this financial information. Now we know based on the objective of conceptual framework. Conceptual framework ke aramuna anuwa. We have to give information about economic resources and claims, ඒ කියන්නේ assets, liabilities and equity, and the changes to economic resources and claims වෙනස්කම් මොනවද assets, liabilities, equity වලට වෙන කියලා. We have to give financial information through the general purpose financial statements. පොදු පරමාර්ථ මූල්‍ය ප්‍රකාශන. හරහා අපි information දෙන්න ඕනේ. Now, when we are giving this financial information, there are certain qualitative characteristics. ගුණාත්මක ගති ලක්ෂණ. Qualitative characteristics are there. So, what are the two categories of qualitative characteristics? One is fundamental qualitative characteristics. අත්‍යවශ්‍යම තියෙන්න ඕනේවා and enhancing qualitative characteristics. වැඩි දියුණු කිරීමේ ගති ලක්ෂණ. Right? It's better to have these characteristics. Now, what are the two fundamental characteristics? Relevance and faithful representation. අදාළ බව සහ විශ්වසනීය නියෝජනය. Relevance and faithful representation. Look at those things first. Relevance. Now, financial information relevant. What do you mean by that? Relevant කියන්නේ මොකක්ද? What do you mean by relevant? Being relevant. The information is considered relevant if it is capable of making a difference in the decisions made by users of information. When the users are making decisions, if a particular information can change the decisions, that information is relevant. අපි තීරණ ගන්නකොට ඒ තීරණ වෙනස් කිරීමට බලපාන්න පුළුවන් නම් අන්න ඒ information එක අපි කියනවා අදාළයි කියලා. Right? Now, let's say when we are making a decision, the company is making a decision to obtain a bank loan, right? To obtain a bank loan, company is making a decision. Now there's information saying company's existing debt structure. දැනට company එකේ තියෙන ණය අනුපාත ටික, ණය ව්‍යුහය ගත්තොත් 60% of the debt structure is from bank loans. 60%ක්ම bank loan අරන් තියෙන්නේ. Can that information be relevant for my decision? දැන් මම bank loan එකක් තව ගන්න යන්නේ. දැනට 60%ක්ම bank loan අපි අරන් තියෙන්නේ. Is it relevant? Is that information relevant to my decision? What do you think? Company is going to obtain a bank loan, and I got the information that 60% of my debt is from bank loans. It 60%ක්ම bank loan ම තමයි අරන් තියෙන්නේ. එතන මොකද්ද වෙන්නේ? It is relevant, right? Because a high portion is coming from the bank loans. Maybe it is just an example, right? Just example. So it is relevant. To make my decision, to change my decision, it can be relevant. So that ඒ කියන්නේ අදාළ බව. අදාළයි මොකක් හරි තීරණයක් වෙනස් කරන්න. When we talk about relevant, being relevant or the relevance, there are three sub-qualitative characteristics. Predictive value, confirmatory value, and materiality. Predictive value, confirmatory value, and materiality. Predictive value means what? In order to be one particular information relevant මොකක් හරි information එකක් relevant වෙන්න ඒකට predictive value එකක් තියෙන්න ඕනේ. ඒ කියන්නේ පුරෝකථනය කිරීමේ හැකියාවක් පුරෝකථනාගයක් තියෙන්න ඕනේ. ඒ කියන්නේ it's like this. By looking at the information in a general purpose financial statement, by looking at the information today, if we can make predictions about the future, by looking at the current information, if you can make predictions about the future, then that information has predictive value. අපිට ඒ information බලලා අනාගතයේ පුරෝකථනය කරන්න පුළුවන් නම් ඒ information වලට පුරෝකථන හැකියාවක් තියෙනවා. By let's say by looking at the profit figure in the P&L, if the profits going up, if you take 2 to 3 years profit, if the profits are increasing, you can assume, you can predict the future like, okay, in future also this company will have higher profits. Profits will increase in future as well. Then what will happen? That company's information has the predictive value. Okay, that is the predictive value. Purokathana agay. What is confirmatory value? Confirmatory value. Now look at this one. Give me a second. Right. Now we are here. We are in this point. Right. By looking at the information at the current period, we are forecasting the future. This is 2027, right? We have forecasted 2027 profits will go up, predictive value. Now let's imagine, now we are in 2027. අපි දැන් ඉන්නේ 2027 නෙමෙයි 2027. Now we have the predictions now. When we were in 2024, we made future predictions about 2027. We have the predictions now. Now in 2027, we can get the actual information as well. We can get the actual information as well. Now, when you look at the actual information in 2027, and compare with the predictions we made in 2024, 2027 actual information එක 2024 දී අපි 2027 පුරෝකථනය කරානේ. ඒ information compare කරලා බලනකොට හරියටම ඒ වගේ තියෙනවා. Right? Now what is that value? What is that qualitative characteristics? That is confirmatory value. Confirmatory value. That means we can confirm the predictions we made in the past by looking at the current information. 2027, we expected the profit to be rise. Now in 2027, when we actually see that information, that is true. Predictions are true. So are you okay with that concept? Predictive value means while in 2024, by looking at the information in 2024, we can predict the future. That is predictive value. Confirmatory value. The second one is confirmatory value means when we are in 2027, those predictions made in 2024 are getting confirmed. Right? අපි කියපුවා හරි. පුරෝකථනය කරපුවා හරි. Confirmatory value. So these two characteristics are interrelated. These characteristics are interrelated. When an information has the predictive value, it will also confirm the predictions you made in the past. අතීතයේ කියපුවා confirm කරගන්නත් පුළුවන්. වර්තමානයේ ඉඳන් අනාගතය predict කරන්නත් පුළුවන්. So are you clear with that? Can I have your feedback? Are you clear with that concept? Yes. So predictive value එක තියෙනවම කියන්නේ අපිට confirmatory value එකක් තියෙනවා කියලා more often you can guess. අපිට අනාගතයේ පුරෝකථනය කරන්නත් පුළුවන්. අතීතයේ පුරෝකථනය කරපුවා confirm කරන්නත් පුළුවන්. So that's why predictive value will quickly go through the definition. Financial information has predictive value if it can be used as an input to the process employed by users to predict future outcomes. This is the important word, to predict the future outcomes. Confirmatory value means financial information has confirmatory value. අතීත කියපුව confirm කරන්න පුළුවන් අගය තියෙනවා if it provides feedback about the previous evaluations. කලින් කරපු evaluations ගැන feedback එක දැන් ගන්න පුළුවන්. Confirm වෙනවා. කලින් කියපුව හරි. That is confirmatory value. What do you mean by materiality? The third sub-qualitative characteristic. What do you mean by materiality? Information is material if it is omission. If it's omission. Omission means magarim or misstatement. වැරදියට ලියනවා. Misstatement could influence the economic decision of users taken based on the financial statements. That means one financial information can be material, pramanaatmaka. Materiality means pramanaatmaka bhava. Material if it's omission. A information එක මගහැරීම. If a misstatement, a information එක වැරදියට ලියපු එක අපේ තීරණවලට බලපාන්න පුළුවන්. Let's say we have a big IT company. In that company, we have computer equipment. Now, when we are depreciating, when we are calculating the depreciation of compute equipment, that financial executive has missed one small computer equipment. Depreciation කරන්න බැරි වෙලා, miss වෙලා. Will that be material for our whole profitability? What do you think? අපේ company එක ලොකු company එකක් අපිට පොඩි computer equipments ගොඩාක් තියෙනවා. එක computer equipment එක depreciation cal කරද්දී එකක් miss වෙලා. Now I'm asking, is it material? Is it material for our profitability? Will that information will significantly affect our profitability and everything? No. Your answers are correct. So that will not affect our decision because we have a very big company. Let's say we have a small company. We have one major building, one big building in our company, owned by the company. When we are calculating the depreciation, there's a significant misstatement of that depreciation value. ලොකු වැරද්දක් ලොකු වෙනසක් තියෙනවා ඒ ලොකු building එකේ depreciation එක හදද්දී. Now is it material for our decision? Is it material for our profitability? Exactly, yes, it is material. So that's how the materiality goes, right? Omission or misstatement could significantly influence the economic decision of users, right? Now, to be an information relevant, මොකක් හරි financial information එකක් relevant වෙනවා කියන්නේ, it should have the predictive value, it should have the confirmatory value or both. It should have the predictive value or confirmatory value or both, and also it should be material, right? In order to be relevant, it can have the predictive value, it can have the confirmatory value or both, and it should be material. I hope that's clear. Right. Then the faithful representation. Now that's easy. Faithful representation means what? Vishwasaniya niyojana. When we are giving information, when we are recording financial information in the general purpose financial statements, that financial information should be faithfully represented. Vishwasaniya niyojanayak venna ඕනේ. In order to be faithful represented, there also you have sub-characteristics. What is the first one? Completeness. That financial information should be complete. When it comes to a particular transaction, all the relevant information related to that transaction should be reported, right? Look at this example. If a company fails to provide information as how it has valued the inventory, the information is not completed. Bagita information dela tiyena. It's not complete. So in order to be faithfully represented, it should be completed. All the necessary information should be provided, right? Completeness. Neutrality. Neutrality means අපක්ෂපාතී වෙන්න ඕනේ. පක්ෂග්‍රාහී නොවෙන්න ඕනේ. Let's say company has a lawsuit going on during these days in the court. අපිට විරුද්ධව නඩුවක් යනවා. ඒකේ විරුද්ධ අපිට unfavorable දෙයක් තමයි තියෙන්නේ. We are not recording that unfavorable impact on the company in the general purpose financial statements. See, a company should not avoid disclosing information on lawsuits filed against it through though such disclosure is damaging. Then company එකට විරුද්ධව නඩුවක් යනවා කියන්නේ ඒක අපිට අසාධාරණ නෙමෙයි. අපිට ඒක damaging නේ. අපිට ඒක හොඳ දෙයක් නෙමෙයිනේ. It has a negative impact on the company, right? Let's say we are not recording it. We are not disclosing that because it is negative to the company. Our recognition will get badly impacted. What will happen? Is it faithfully represented? If we are not disclosing about that company's lawsuit, is it faithfully represented? No. It doesn't have the neutrality. එක පක්ෂග්‍රාහී වෙලා අපේ benefit එකට. Right? That's what neutrality means. It means that company cannot select information to favor one set of interested parties over other. අපිට පක්ෂග්‍රාහී විතරක් information record කරන්න බෑ. We have to record everything. We need to record faithfully all the information, right? Neutrality means that. And free from errors. When we are recording information, we can't make errors. If this erroneous information is recorded in the financial statements, that does not give the accurate picture. Hari picture එක එළියට දෙන්නේ නැහැ. Hari information නෙමෙයි තියෙන්නේ. Free from errors. So remember, when to be faithfully represented, completeness should be there, neutrality should be there, it should be free from errors. සියලුම information record කරන්න ඕනේ, completely all necessary information. එක පක්ෂයකට විතරක් පක්ෂග්‍රාහී වෙන්න බෑ. It should be neutral, right? We need to record everything. It can be positive or negative to the company. We need to record everything. Neutral. And it should be free from errors. Errors දෙන්න බෑ. Faithfully represented. So we have discussed the two fundamental qualitative characteristics, relevance. Relevance, there are predictive value, confirmatory value, and materiality. And then faithfully represented. Under that, sub-qualitative characteristics are completeness, neutrality, and free from errors. Enhancing qualitative characteristics. තවදුරටත් අපේ හොඳට financial information record කරන්න වැඩි දියුණු කිරීමේ ගුණාත්මක ගති ලක්ෂණ. What are those? Comparability. When we record financial information, we should be able to compare our financial information with the previous years, our company previous years. And also, not only previous years, we should be able to compare our financial information with other similar entities. Api information, ape previous years එක්ක කලින් අවුරුදු එක්ක සංසන්දනය කරන්න පුළුවන් වෙන්න ඕනේ. ඒ විතරක් නෙමෙයි වෙන companies, වෙන සමාන entities, right? සමාන entities එක්ක compare කරන්න පුළුවන් වෙන්න ඕනේ. Comparability, සංසන්දනාත්මක භාවය, right? That is what it says. The financial results of a company, a motor vehicle trading company, should be comparable with another entity in the same industry. Compare කරන්න පුළුවන් වෙන්න ඕනේ. Similarly, the year-to-year information of this company should be comparable. අපේ company එකේම කලින් අවුරුදු එක්ක compare කරන්න පුළුවන් වෙන්න ඕනේ. Comparability. Let's say you are changing your accounting policies or estimates annually. Can you compare your financial statements now? No. You change your structure annually. Can you easily compare your information now? You can't. So that's what comparability. Verifiability. සත්‍යාපනය කළ හැකි බව. Verifiability. Your information should be verifiable. Let's say the example is your company is calculating depreciation for the year. ෂය වියදම ගණනය කරනවා. Calculating the depreciation. So you take the cost details, you take the purchase dates, You take the depreciation rates and doing the computation, you get the number. At the end of the year, at the end of the reporting period, the auditor comes to do the audit. Auditor කෙනෙක් එනවා audit කරන්න. Auditor is also computing the depreciation now. Using what? Using the same information. Maybe same cost details, same depreciation rates, same purchase dates and everything. Auditor is also calculating the depreciation. Now what should be the case? Those two values should be equal. There can be small differences, but those two values should be equal. If it is equal, that means verifiability. If someone performs the same method, same computation again, you need to get the same answer. Verify karanna puluwan wenno. So it says it occurs when independent measures using the same methods obtain similar results. එක වගේ information ලැබෙන්න ඕනේ. කවුරු හරි වෙන කෙනෙක් ඒක කරත් සමාන results ලැබෙන්න ඕනේ. Verifiability. So it says the auditors of a company can compute inventory value, not only depreciation, inventory value presented in the financial statements based on the FIFO method. Auditor is calculating again, he or she should get the same answer, more or less the same answer. So that is verifiability. Timeliness, කාලීන වෙන්න ඕනේ, කාලීන බව. Let's say if the first quarter financial results of a company, first quarter means පළවෙනි කාර්තුවේ, පළවෙනි quarter එකේ financial results published කරනවා, present කරනවා after 6 months, right? In the year, first quarter one financial statements, they are publishing it after 6 months. Does that information have timeliness now? Then කාලීන බව තියනවද? No timeliness, right? Usefulness වෙන්න නම්, if that information to be useful, භාවිතා කරන්න පුළුවන් වෙන්න නම්, it should be provided at the relevant time. Timeliness should be there. Understandability. When we read, when we see the numbers and the details presented in the general purpose financial statements, you should be able to understand it. Clearly classify කරන්න ඕනේ, right? It means classifying, characterizing, presenting information clearly and concisely. පිළිවෙලට පැහැදිලිව තියෙන්න ඕනේ. Understand කරගන්න පුළුවන් වෙන්න නම්. So understandability, right? So those are the enhancing qualitative characteristics. What are those for? Comparability. You should be able to compare with the previous years and the similar entities. Verifiability. You should get the same answer if you follow the same method. Timeliness. Information should be provided on the right time. Understandability. Users should be able to understand. So you need to classify and present information clearly and concisely. That is understandability. We have a small activity. Activity 2.1. That is the last slide for the day, right? We are going to complete up to the 20th slide and the time is also up, 9:30. We'll quickly see this activity quickly. Discuss how qualitative characteristics of financial information are applicable in the following situations. There are 4 situations. How these qualitative characteristics of financial information are applicable. Look at the first one. Assets are revalued. ප්‍රත්‍යාගණනය කරලා at their fair values and recognized in the financial statements. Company has revalued its assets and recorded in the financial statements. As you think, what is the qualitative characteristic? What is the qualitative characteristics affected by this transaction? Company has revalued its assets. Very good. Relevant. Yes. Relevance. Now the information is relevant, right? Very good. Relevance, and you can take, we don't have, we can't exactly say this is the correct qualitative characteristics here. You can always argue, right? That is the point of this activity. There are no exact qualitative characteristics. You can say relevant, as you have told. Most of you have mentioned relevance. That is correct. And of course, you can take timeliness as well. කාලීන බවට අදාළයි. Then, if you have purchased your assets 50 years back, that has an old value. Revalued means you have taken to the correct market value. Timeliness is there. It has the relevance. It is faithfully represented now, right? You can argue like that. Look at the second one. Exactly, very good point. Losses the comparability. Now, if you compare with the previous years, you lose the comparability. Now, previous years, it's in old historical balances. Now, in revalued values, you lose us the comparability. Very good. That's how the qualitative characteristics are getting impacted. But that is not a problem, right? Even though you lose us comparability, you are doing it for betterment. You are being more relevant, right? Don't think these qualitative characteristics are conflicting each other. It's not, right? Assets purchased under a lease are recognized in the lessee's financial statements, right? Assets purchased under a lease. කල්බදු ගත්තට පස්සේ කල්බදු ගැනුම්කරුගේ පොත්වල you record the assets. Even though you don't get the legal ownership, irrespective of whether you have obtained the legal ownership, legally අයිතිය තිබුණත් නැතත්, as per SLFRS 16, you record your leased assets in lessee's books. ඒ කියන්නේ කල්බදු ගැනුම්කරුගේ පොත්වල record කරනවා. Exactly. Faithfully represented. It shows the substance, right? Substance. You faithfully represent it. And it is relevant as well. You can say relevance as well. The valuation basis of year-end inventory is changed to the weighted average from FIFO, which has been used in previous years. කලින් තිබ්බේ FIFO, then එක WAC කරලා from this year onwards. What are the affected qualitative characteristics? What are the affected qualitative characteristics? Very good. Comparability. Now you can't compare previous years in which basis? FIFO, now in WAC, right? You lose us the comparability. That is correct. And then maybe you have changed the counting policy from FIFO to WAC to be more relevant. To be more relevant. So you can take relevancy as well. So comparability and relevance. And then last one, assessment of the carrying amount of year-end inventory presented in financial statements based on its cost. Using the cost, you calculate the carrying amount of the inventory. What is that? Using the information, cost information given, you calculate the carrying amount of the inventory. What is that? Maybe you can take verifiability. Very good. You can verify. When you are calculating, you are doing it again using the cost information and the same method. You should be able to get the same amount, same values. Verifiability. And you can take relevance and faithful represented as well. So again, I'm saying more qualitative characteristics are getting impacted. We can't exactly say this is the correct answer. Right? In some instances, සමහර තැන්වල අපිට කියන්න පුළුවන් මේක තමයි වඩාත් සුදුසු ගුණාත්මක ගති ලක්ෂණය කියලා. We can say this is the most appropriate qualitative characteristic, but more or less all qualitative characteristics are getting impacted. Right. So with that, this is it for today. We can wind up the session, but we have an important announcement now. We are doing this course like financial accounting and reporting from the Department of Accounting. Now the Department of Accounting students body is there. That is, we call AFMA, Accounting and Financial Management Association. AFMA, it has organized a 3-day OBT for second year undergraduates. Our දවස් 3ක OBT එකක්, outbound training එකක් organize කරලා තියෙනවා. Lecturers are also participating. So in that case, next Monday, Tuesday and Wednesday, we are going for that OBT with all the second year students, with AFMA students, we are going for that OBT. So with that, we won't be able to conduct real-time online session like this on next Monday. So next Monday, At that time, we had left for that OBT. So in that case, we don't have online real-time lecture like this, but we will upload a recorded lecture balance for the balance part of this lesson. We will upload a recorded lecture within the day. I'll say it again. අපි AFMA එකෙන් accounting department of accounting students body එක තියෙනවා AFMA එක. ඒක සංවිධානය කරලා තියෙනවා OBT එක. ඉතින් මේ OBT එක අපි යනවා ලබන Monday Tuesday Wednesday. ඒ නිසා අපිට ලබන සඳුදා උදේ 8 තියෙන lecture එක කරන්න වෙන්නේ නැහැ. online කරන්න වෙන්නේ නැහැ. ඒ වෙනුවට අපි recorded lecture එකක් upload කරනවා LMS එකට within the day. Don't expect it at 8 a.m. Right? Within the day, we will upload for the balance part. Right. So with that, we can wind up today's session. And yes, let's wind up today's session. I hope you are clear, right? I hope you are clear. If you have any clarifications, you can clear those clarifications in future as well. Hopefully when we physically meet. So thank you for giving me answers as well. Very interactive session, I would say. Thank you very much.